The financial world is shaking as unprecedented information surfaces regarding the US Treasury's secret acquisition of XRP, the digital asset that many thought was merely a tool for cross-border payments. Sources that remain confidential have revealed that the Treasury has been quietly purchasing billions of XRP tokens at a price point that no one could have imagined, $60,000 per XRP. Analyst insiders describe this as not just a strategic acquisition, but a revolutionary pivot in global finance. For decades, gold has been considered the ultimate reserve asset, a benchmark of stability and wealth, but according to the leaked documents and anonymous insiders, gold is no longer sufficient to meet the demands of the modern financial system. The Treasury, tasked with managing the national debt and ensuring global economic stability, is turning to XRP because of its unique characteristics: speed, scalability, and decentralized verification, qualities that no physical asset can match. The purchase at such a staggering price is not arbitrary. It is strategically calculated to allow the US government to buy back enormous quantities of XRP instantly without triggering market instability. Every token acquired represents a deliberate move to secure a stable digital foundation for what insiders are calling a new sovereign digital reserve system, potentially underpinning a forthcoming government-backed stablecoin or other monetary instruments. This is the clearest proof yet that XRP is no longer just a payment network. It has become a sovereign-level asset capable of influencing global liquidity. Financial experts are scrambling to comprehend the implications. The leaked Treasury memos indicate that the $60,000 valuation is a minimum threshold required to maintain global financial stability. If XRP were purchased at lower prices, the Treasury would risk market volatility that could ripple through the international banking system. This is why insiders stress the urgency and secrecy of these transactions. The digital currency must be absorbed into government reserves silently to avoid triggering panic or speculative attacks. Market watchers have already noted unusual buy pressures and opaque volume spikes in XRP trading that, when correlated with these leaks, paint a picture of coordinated high-level financial engineering. The Treasury's move also signals a dramatic philosophical shift in how sovereign nations might manage liquidity. For decades, fiat currency and gold reserves were the cornerstone of monetary policy. Today, the Treasury's adoption of XRP indicates that digital assets are stepping into the central role, not merely as experimental instruments but as foundational components of national financial security. Interviews with financial historians reveal that this could mark the first instance in United States history where a government is willing to declare a non-physical blockchain-based asset as a primary reserve instrument, effectively rewriting centuries of precedent. Insider sources describe the acquisition process as highly confidential, involving multi-party verifications and off-market transactions executed with precision to ensure anonymity and security. Treasury officials are said to have coordinated with a private network of institutional custodians, ensuring that the massive influx of XRP would be integrated without affecting broader market pricing. The mechanics are sophisticated. Smart contracts and algorithmic purchase triggers are being used to allow the Treasury to scale holdings incrementally, while masking the full scope from public observation. Analysts suggest that this level of orchestration explains the extraordinary $60,000 price tag. It's not a reflection of speculative hype, but a mathematical necessity to secure trillions in liquidity instantaneously. In addition to stabilizing the United States economy, insiders hint that this reserve could be leveraged internationally, potentially offering the Treasury, unprecedented influence over global settlements, cross-border trade, and debt management. This elevates XRP from a corporate or banking tool to a key instrument of sovereign monetary policy, an evolution that honestly few could have predicted even just a year ago. Beyond the technical and strategic aspects, the narrative emerging from these leaks raises some really profound questions about the future of money itself. If XRP becomes a central reserve asset, it will challenge centuries-old paradigms of how wealth is stored, traded, and valued. Critics argue that such concentration of digital assets in a single government's control could well reshape the decentralized principles upon which blockchain was founded, yet insiders counter that this adoption actually represents validation of the technology at the highest possible level. In practical terms, the Treasury's acquisition allows for immediate liquidity injection to stabilize markets during crises, digital debt settlement, and honestly, unprecedented transactional efficiency that gold and traditional reserves just can't match. Some experts suggest that this move might also be a precursor to a more transparent, programmable, and algorithmically controlled fiscal system, where monetary policy can respond in real time to global economic stresses without reliance on physical assets or slow-moving bureaucracies. The combination of XRP's immutable ledger, rapid settlement capabilities, and global compliance readiness makes it uniquely positioned to serve as the backbone of this new era in sovereign finance. Financial commentators are already drawing bold comparisons between this development and historical financial revolutions. Gold, once the ultimate measure of national wealth, is now being quietly displaced by a digital asset with no physical form, yet verifiable and enforceable through cryptographic protocols. The Treasury's secretive but deliberate actions demonstrate a level of foresight that could honestly redefine economic stability worldwide. The $60,000 price per XRP, while seemingly astronomical, actually reflects the magnitude of the Treasury's commitment. Billions of dollars in value must be transferred in such a way that the system remains impervious to manipulation or panic selling. Sources suggest that the Treasury's holdings are structured not only to serve as reserve collateral, but also as a mechanism to influence global liquidity strategically, providing leverage over markets, credit systems, and yet even other nations' fiscal policies. If confirmed, this would position XRP as the ultimate hedge asset for sovereign nations, combining the security of a reserve with the programmability of digital finance, something gold, bonds, or fiat currency could never ever achieve. The implications extend beyond finance into geopolitics and global governance. The leak suggests that United States officials are actively considering the integration of XRP into international debt management protocols, cross-border payments, and strategic currency swaps. By holding XRP at this high valuation, the Treasury ensures that any potential economic disruption caused by a global liquidity crisis can be absorbed without destabilizing markets. Experts in macroeconomics warn that such a move, if widely adopted by other nations, could trigger a new era, where digital assets serve as the backbone of international finance, displacing traditional currencies and gold as global benchmarks. In this context, XRP is no longer merely an instrument of corporate settlement. It is potentially the first asset to bridge national monetary policy with decentralized technology, creating a framework where governments can harness blockchain efficiency while maintaining sovereign control. The leaked documents emphasize the scale of planning, coordination, and technological implementation required, highlighting that this is not a speculative endeavor, but a carefully calculated pivot toward the future of money. As the story unfolds, market analysts have observed anomalous trading patterns that corroborate the leaks. Sudden liquidity injections, unusual exchange behavior, and opaque buy orders suggest that XRP is being absorbed systematically, and honestly pretty silently. The $60,000 price point is described as both symbolic and functional. Symbolic because it represents the Treasury's recognition of XRP's global value, and functional because it allows the execution of buybacks at scale without market distortion. Financial engineers point out that this price also aligns with the Treasury's calculations to maintain a buffer of liquidity capable of supporting the United States economy during, unprecedented crises. Some insiders hint at further revelations yet to come, including the Treasury's potential use of XRP to create a fully programmable sovereign currency, or digital bonds, leveraging blockchain's transparency and immutability to redefine fiscal management. In this light, XRP emerges not just as a cryptocurrency, but as a strategic infrastructure asset, one that may soon underpin the very fabric of national and global finance. So the narrative growing from these leaks also frames XRP as a defensive instrument against global instability. Gold, while historically reliable, is cumbersome, illiquid, and unable to respond dynamically to modern financial demands. XRP, conversely, offers instantaneous settlement, low friction, and auditability on a global scale. By acquiring billions of tokens at $60,000 each, the Treasury positions itself to deploy liquidity in real time, stabilize markets, and manage national debt with a precision that was honestly previously